Hey everyone, it's Dez Gerald with another Sensible Sundays. Dez Gerald with DI Real Estate and Staging, and we also have Miss Karena with War Cry Consulting. And today's topic is the legacy of credit. And this is definitely Karena's area of expertise. And so we're just going to jump right into it right now. Go ahead, Karena.
Awesome. Hey
Get
guys,
started.
thank you for joining us again on Sensible Sundays. I am Karena Calhoun of Warcry Consulting Solutions, and I work extremely closely with Dez Gerald. We have known each other for many years, and there is just a common respect and love and appreciation that we have for one another. And I just want to share a text and I kind of catching Dez off guard, but I want to share this text that it was in my heart. And so I sent this to Dez on New Year's Day. And this was something that it was not a canned message. It was only to her because I truly believe in the direction that we are going in 2020, the impact that we want to have, the impact that we want to see. And it says, Happy New Year. Let's impact the next decade with the experience, knowledge, and wisdom that's been gained from the last 4 to 5 decades. Let's go. And so with that statement, with that text, that gives you a little bit of insight as to what we're doing and why we're doing it. We are serious. We are, guys, we are so serious about what we're doing. This is a commitment that we have really latched onto, and we're pushing one another. We are coming out of our comfort zones, and we are girding one another up so that we can gird you guys up. So, guys, with that being said, the legacy of credit. We're going to talk a little bit about this, and this is not going to be a long segment on today because I want to give you a really high-level overview of the legacy of credit. And then at the end, I believe Dez has some questions that came in from some viewers that I will be answering. And so talking about the legacy of credit, today we're going to talk about legacy, we're going to talk about credit, we're going to talk about debt, collaboration, not competition, and then a few tips and tricks, okay? And so legacy is an amount of money or property left to someone in a will. Then the second definition of legacy that I wanted to really pinpoint is something transmitted by or received from an ancestor or predecessor or from the past. So legacy, this is something that we're passing on to generation to generation to generation, something that we would have received from the past to now and taken into the future. So the next thing is credit. The legacy of credit. So credit is the balance in a person's favor in an account, number one. Number two is an amount or sum placed at a person's disposal by a bank, okay? Number three is the provision of money, goods, or services with the expectation of future payment. And then number four is financial or commercial trustworthiness. Keep that one in the forefront of your mind. And then the last one is influence of power derived from enjoying the confidence of another or others. That's a winner right there, y'all. So the legacy of credit. We went through the legacy, what legacy is. We've gone through credit. Now we're going to talk about debt. So debt is, and guys, I want you to really pay attention to this picture because a lot of times when I talk to people about debt, this is what I see. Okay, so this picture it's
you're below water.
yeah.
Below.
And you're just like, I just need a hand.
Help me.
Yes, I just need a hand, just one hand. There is no help in sight. And so debt is a state of being under obligation to pay or repay someone or something in return for something received. It's a state of owing. A state of owing.
Right.
Okay. And I'm going to talk a little bit about credit and debt in a moment. I don't want to get too ahead of myself because, guys, I am so extremely passionate about this. And I shared a little bit of my story in the last segment. Many years ago, during the economic downturn, I had purchased my first house years prior, and actually lost that house in the economic downturn. And so, this is something that I am truly passionate about. I lost that house, but through the grace of God, let's be honest, and through work and perseverance and just really pushing, I now own several properties. I own land. I manage other properties. So it's not, hey, let me boast on me, but it's to say, you know what? That picture was me.
Yeah. And you
And
turned it
so I
around.
don't just have, oh, she's learned this or she's been certified. I have the experiential knowledge, okay? The wisdom. So whatever it is, Dez is amazing in what she does in locating a property for you. Not just, hey, let me just throw a list of houses at you and let you decide on which one you want. But she is big on education. So guys, Sensible Sundays, I just want to just throw this in there. Stay tuned. Stay tuned. Turn on your notifications. Send us questions. If we don't have the answer, we're going to find out for you. Okay. We're not going to just give you fluff. We want to empower, and then we want to send you out. Okay. There's a difference in we want to empower and you just sit on that knowledge.
Right.
We want to empower.
We want you to take action.
Yes. That is the key. That is the key, Dez. We have to make sure that whatever information that we have, we take action. There are a ton of people out here that they have a wealth of knowledge, but do absolutely nothing with it.
Right. Yeah.
You know?
Yep.
And so this being under the water, this is not a death sentence. I can tell you from experience, this is not a death sentence. You can recover from this. So debt, a state of owing, basically is what it is. Okay. And then credit and debt. Okay. When you look at the two, credit is your ability to take on debt. It's the ability to take on debt. Debt is the actual amount that you currently owe to a creditor. Because sometimes people look at, I don't have any credit. Well, let's look at why. Let's look at why you have no credit. Let's look at why you have too much debt.
Right.
Okay, so we have to know the difference between the two. There's a difference in credit. There's a difference in debt. Okay. And collaboration, not competition. And we heard this in 2019 on so many fronts with so many different things in businesses and all kinds of things. People talked about collaboration, not competition. So let's talk about collaboration, not competition when it comes to credit and debt. They should not be in competition of one another because one is bound to lose.
Right.
And typically, you're going to lose if you got too much debt going on. And so we want to learn actually how to collaborate. The two of these need to work hand in hand. It's okay to have debt. Let me just say that. It is okay to have debt in some cases. Okay. If you can go and buy a house without a loan, wonderful. But for the majority of us, we have to go and get a loan. So in some cases, debt is okay, but it's how you take on that debt and then how you manage that debt. And is that debt sustainable? So that's where Dez and I come in. So we want to make sure that throughout these Sensible Sunday sessions, we're going to be talking a lot about collaboration, not competition. Whether it's me talking about credit or Dez talking about homes or any other guest that comes in, this is going to be the basis of it. Collaboration, not competition. We should be able to work all of these intricate pieces together so that they benefit us. Okay. And then, so there are a couple of reasons why debt overtakes us. And so I wanted to make sure I did mention economic hardships. And then there's also financial mismanagement. Okay. So you have one end of the spectrum going to the other end of the spectrum, because I know a lot of times money management coaches or experts, consultants, credit experts, a lot of times people talk about financial mismanagement when it comes to debt and debt being overwhelming. So I wanted to make sure that I put this in here, that everybody is not mismanaging their finances just because, they don't know how. Sometimes there's just truly, honestly, economic hardships that they are encountering, job losses, illnesses, deaths in families, things of that nature. So whatever the situation is, you can recover from it. So we have to begin to think in our mind, let's go back and find out, how did it start? Where did it begin? And let's tackle that. Because guys, let me tell you, you can go and get credit repair. I've talked to other credit people, experts that have done credit restoration. They will do it every couple of years on the same person.
Wow.
That is disheartening. Yes.
That's a mental issue there. Like, just,
right.
The mindset behind that is not healthy.
Yes.
One thing I wanted to point out too, for everybody that's looking, like, if you are dealing with the company and it's like just this automated service where they just collecting your money, you pay $9.99, $99, whatever it is a month, and they're like, you have no one-on-one attention, nobody really looking at your credit and going over it with you, you are wasting your money and you're wasting your time.
Absolutely.
Okay.
Absolutely.
That's something, like, when clients come to me and they're saying they're working with this credit company and that credit company, I'm like, okay, have you spoken to anybody? Or, well, yeah, they took my money in the beginning and they're doing all these I think this letter disputes or waves of letters or something like that. You're wasting your time, you're wasting your money, because number one, it's just automated, it's not personalized attention, and it's definitely not focusing on your mindset, which someone had just brought up. So that, stay away from those companies.
Exactly.
Don't do it.
And I will say that, I do partner with some of them. However, the difference is, like Dez said, you actually sit down with me. Mm-hmm. Okay. We go through your entire financial landscape. There's a huge, huge difference, guys.
Yes.
If you are sending your money out and you don't talk to anybody, and like Dez said, there's waves of dispute letters being sent and you're not really sure why they're being sent or what they're being sent for, and you haven't talked to anybody else other than when you initially signed on, run.
Yeah.
Run. Because they are not there to actually help you solve a problem. They're there to line their pockets. And I just have to be that blunt with it.
Right.
They are literally there to line your pockets. If you are not being coached to change your behaviors, to change your mindset, and guys, this is a ugly, 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 ugly time. But it should be a time of no judgment.
Right.
Nothing where you're gonna feel bad about. You're gonna feel bad in the regard of, okay, I see what I've done wrong. Now I need to rechange, or I need to change that behavior. I need to do a 180 and I need to move on.
Right.
But it's never ever, oh, well, you're just the scum of the earth. No. I've
Right.
talked to some people that have 400 credit scores, and it breaks my heart. It
Mm,
literally breaks my heart because I empathize with what's going on.
right.
Dez has talked to people with low credit scores, and she's talked to me, and it breaks her heart because it's not necessary. But we have to change the mindset. So, guys, please stop running up to these credit repair places and saying, hey, let me just, because you're basically saying, let me give you some money.
Right.
If they're not
Pretty
helping,
much.
yeah,
Yeah.
yeah. If they're not helping you to sit down and change your mindset. So that's what the legacy of credit is really about. Can you imagine having to get your credit restored, repaired every 2 to 3 years, every 5 years?
That shouldn't be it. And you know what? It just takes just take the information and knowledge and take baby steps. The more and more you work on it, the more confident and the better that you're gonna feel about yourself. Honestly,
Exactly.
you're not gonna feel bad anymore because you have
Exactly.
bad credit because you're actually taking those steps to do something. So,
Yeah, and we have to be accountable, guys, whether it was an economic hardship or
mhm,
financial mismanagement. It does not matter which one it was. We still have to be accountable to rectifying the situation, empowering ourselves, and then moving on and creating a true legacy.
that's right.
Okay. I've seen some folks on social media and, celebrities who blow up and get all this money, and then, they still don't know what to do with it. Well, guess what? They're not teaching their children a true legacy.
Mhm,
They're leaving behind something, hopefully, that will, it may disappear at some point. But when you can leave to them that monetary value and that wisdom that they're
mhm.
able to pass down, that's where that true legacy comes in.
Right. Yeah.
And
Absolutely.
credit has to be a part of our legacy, that we begin to think, you know what, I need to leave this behind.
Mhm.
I need to leave credit knowledge, credit wisdom, credit habits. I need to
Mhm.
be able to leave the greater of it behind to my children and my children's children, touching everybody that I come into contact with.
Right. Yep.
So the legacy of credit, guys, this is not like Des and I spoke before we even jumped on this video. You can Google just about any question that you have and get it answered, but you cannot Google a mindset.
Right.
And so we have to, going into a home, that's a certain mindset that you have to have.
Yep.
Okay. I know of a couple that went into a home, um, and within 6 months, it was a bad situation for them
Mhm.
because the mindset had not changed, even when the economic hardship came. That's not good, guys. So we have to work on our mindset. So purchasing a home, we want you to do that. And we want you to do it with a greater mindset, leaving a legacy. So the next slide, these are a couple of my tips and tricks. So a lot of times, I like to teach my folks to keep the balances of your credit limit below 10%. Okay.
I'm
If
glad
you
you
keep
said
it
that because I hear a lot of people say, "Oh, 30%, bring it down." No, 10% and under if you
10% is
can.
going to optimize your score.
Yep.
And a lot of times, let me talk about this for a second, because I've talked to people about this. And guys, these are some of my tips and tricks that I don't give out unless you're one of my clients. So I'm giving this is good info. When I talk to people and I tell them to keep your balances below 10% to optimize your credit score, but Karina, that means I don't have much credit to use then. Absolutely, because you're not living off of credit, you're living off of your cash flow.
Right.
And so you have to begin to change your mindset that I'm not living off of my credit cards.
Yep.
So, yes, you want to be able to capitalize off of your credit, which means keeping your balances low. 30% sounds great, But guess what? That was a amount, that was a limit that was set by creditors. It was set by creditors. Creditors want you to be in debt. They don't want you to be in financial ruin, but they want you to be in debt.
Yeah, so they can make money.
Absolutely. Absolutely.
Yeah.
So keeping those scores, keeping that limit below 10%, you're going to see your credit score jump. Okay. The second tip, Credit Karma is not your friend. They are a marketing tool. And yes, I do know they've started this new savings account thing going on. I've not had a ton of time to really look into it. That's wonderful. That's great. But read. Yeah. Find out everything about it that you can. Credit Karma, they are a marketing tool. So you can go on Credit Karma and get your credit score, and it will say 500 or 580 or 600, and then you go to a lender and they pull it and it's for something. Okay, so you really want to make sure, if you're looking at Credit Karma, you could probably look at Credit Karma to get additional credit cards if you're working it strategically. Okay, there are strategic ways to get more credit. We'll talk about that at another point. The third tip, annualcreditreport.com. Annualcreditreport.com. This is not going to give you your score, but this is going to give you your free credit report every single year. Now, another tip that I only give out to clients, instead of pulling all 3 reports at one time, pull one every quarter of the year. Work on that report. And this is for you guys that are wanting to do your own credit restoration, credit rebuilding. It can be done. You can do it in your own home. Pull one report, okay? Work on that report, clean it up. Then the next quarter, pull the next report. And although they don't always have the same exact information on there, they typically should be a little parallel. So you should be able to see some movement in this. Okay, so pull one report one quarter, pull the next report the next quarter, pull the third report the third quarter. The fourth quarter, you're going to work on that fourth quarter to really build up your credit, because those first 3 quarters you have repaired and restored and rebuilt and all this other stuff. Okay, so this is a tip, because most people say just go pull all 3 reports. Don't do that, because then you got to wait a whole nother 12 months to see what's been done.
Right.
So again, this is accountability.
That's a good tip.
Yeah, this is accountability. This is really taking the reins and working on your own financial portfolio.
But
another tip,
it's always good to invest in you. Okay.
Yes,
Invest
absolutely.
in yourself. Take the time to invest in yourself. When you think about it, you invest in so many different things that are not beneficial to you.
Exactly.
This is beneficial to you and your family.
Exactly.
So invest in you.
Exactly. And then the fourth tip, add your teenager as an authorized user to your positive high ranking credit card. Their graduation gift can be the 700 Club. Okay. My daughter, when she graduated in 2016, this was her gift, the 700 Club. So at 18, she had a credit score of over 700.
Now, I was just talking to my daughter, my teenager, about it, because I was like, by the time you get out of high school and start in college, I definitely want you to have some great credit established. So I was thinking of doing a secured card. Would that be a good idea?
You can do
credit card.
You can do a secured card to help teach her.
Mm-hmm.
But then I would also add her as an authorized user. Okay. And what I did, I added my daughter. I just did not give her the card.
Gotcha.
Okay. And so, you can do the secured card. And then that way you can teach her the credit management skills that she
Right.
would need with the
Yeah.
secured card. But
Hmm.
then that other credit card is really going to boost her score, because the thing is, it's going to give her longevity,
Right.
and it's going to give her the type of credit. Okay.
Okay.
And it's going to give her the good payment history.
Okay.
So those are the
Makes
things that you
sense.
want. Yeah, those are the things that you want to be able to incorporate in. So you want to look at the longest credit card you had, and that has a good score, good payment history, and then you're going to boost her score by adding her to that.
Okay.
Yep. And I advise people to do this, as often as possible, because we can give them a car, we can give them all kinds of stuff for
Hmm.
graduation, but why not give them something that, what, I'm going to start you off where you actually have the potential to go be great.
Yeah. Yeah.
Yep. And they have something to build on,
Right.
which then leads to the last tip and trick. In your teenagers mid-20s, when they get a little bit older, walk them through the home buying process. Even if they don't want to live in the house forever, they can rent it out later. So my daughter's goal, or the goal that we had together when she graduated from high school, was that by the time she was 24, she would have her first house. Whether she lived in that house
Right.
years or not, that is the goal. So she's
Right.
not reached 24 yet, she's still 22, but for 24, that is our goal,
Okay.
that she will have a house that she's, it could be, a small single family home, not a problem. And then if she decides, because these are young people, they get up and leave and move and go all kinds of places. If she doesn't want to live there anymore, rent it out. Guess what? You have passive income right then.
Right. And see, that's what I'm also teaching my daughter as well. Once she gets in college, and that's why I want her credit score to be good by the time she gets out of high school, because we actually want to purchase like a condo or just
Yep.
something wherever she is, and then we could just house hack the condo because she
Right.
can live in one room. Students, they're used to having roommates and stuff like that. And if we find like a 3 bedroom, she could rent out the other 2 rooms, and she could potentially make income. One of the rooms could probably cover, or maybe one and a half of the rooms could cover the mortgage, and the rest could potentially be income or to pay utilities. And she's not coming out of pocket paying for anything.
And that's actually a wonderful idea. My daughter, when she was out at Hampton, she connected with a young lady. The mom had done that very thing. And
Hmm.
so she was renting out. The daughter of the mom was in college at Hampton, and the daughter lived in one room, and the master bedroom, of course. And then the other 3 bedrooms, they rented out.
Exactly.
There you go. You've got income. I mean, it's amazing, some of the hacks that we can do out here. We just have to have the knowledge, and
Right.
we have to be empowered to know that we absolutely positively can do this.
Right. Absolutely.
It is not unheard of. It happens all the time.
Yep.
Okay. And then I just wanted to break this down a little bit more, with the credit report. Sometimes sometimes we have to be able to see it, because this is one of the things that I truly, truly believe in. Again, I typically don't share this out, but you want to order one report every quarter. January, February, March is one quarter. April, May, June, July, August, September, October, November, December. So these are the quarters broken down. And of course, you don't have to follow these quarters. You can do it however you need to do it. But this is just an example. Since this is January, you want to go ahead and order a report. It doesn't matter if it's TransUnion, Equifax, or Experian.
This makes sense because you're
Yeah,
getting to, instead of pulling all three, like you said, at one time, because you only have one free credit report pulling like per year, right? With
right.
this company, you're getting to pull multiple times.
Yeah. And
So,
so because you do this, you're able to really look at that report, clean it up. You got 3 months, work on it,
Right.
really dig in and get it cleaned up. Then you're going to work on the next one. And by the
Right.
end of the year, you got great credit,
Mm-hmm.
or should be working towards it anyway,
Right.
you know. And then at the end of the year, you know, and I put on here October, November, December, you're going to use these months to build for the coming year. You know,
Mm-hmm.
because at this point, then you can go back to Credit Karma and see what Credit Karma is saying based on your scores that they're pulling and all your other spending behaviors, because they're looking at all of this, believe it or not. Then they're going to say, well, you know what? You actually could apply for this particular credit card.
Right.
And your chances are high or low or medium, whatever they are. And then you can go to Credit Karma and begin to build your credit by getting additional credit. Don't use it too often, but you want to stay below that 10%. But this is a phenomenal strategy that you can do at home yourself.
Yeah.
So this is the legacy of credit. You send this on to your children, your children's children. And even if you have great credit, guess what? You still want to follow this process anyway. You want to pull your credit score, your credit reports, to look and see what exactly is on them. Okay?
Mm-hmm.
And so, guys, this has been my little presentation. I just wanted to let you guys know that you got this. Okay? Sensible Sundays with Dez and Karena. You got this.
Yes, yes. So I had a couple of questions from some
Okay.
people that sent me some messages. And one of them, let me see. How does credit inquiries affect your credit score? Is one of the questions.
So credit inquiries are a major hit to your credit report, your credit score, mainly because they are looking at, are you shopping around? And I just want to give you, again, you can Google all of these questions, but I want to give you the real deal on it. The reason why credit inquiries hit your score so much is because creditors are thinking, okay, whether it's right or wrong, they're thinking that you are not able to get credit from this lender. If this lender did a credit inquiry, okay, let me just use this example. We'll say ABC Bank did an inquiry on your credit report. We'll just say Dez Credit Union did another inquiry. Dez's credit union sees that ABC Bank did an inquiry, but there's no new debt. There's no new credit on there. So Dez's credit union is going to say, you're not credit worthy because they looked at your credit report. They saw something that we may or may not see. So we're not going to give you credit.
Mm.
So that's their thinking behind these inquiries. Why do you have so many? You're shopping around. Typically, people begin to shop around because they're desperate.
Mm.
They need cash. And so that's why these inquiries hit your score so bad. Typically, I want to say it's like 6 per year that they say once you get over the 6 mark, it really begins to damage your score.
Okay.
But you want to keep it below that. Only have people pull your credit if it's absolutely necessary.
Right. Well, I know with when it comes to purchasing a home, a lot of times people will want to shop around for the, best mortgage rate and things like that. I mean, I do kind of recommend buyers at times to like maybe do an application with 2 lenders, 3 tops, but that doesn't, like, as far as your inquiries, if you have the same company pulling your credit report as opposed to you have the mortgage lender and now you're out here going to a car dealer, now you're out here going to a department store getting a credit card, the inquiry hit is not as bad if it's the same industry, right? Like they know that you're shopping around for.
Right. So let me give you a little hack, another little hack.
Okay.
Do your homework. Contact somebody like myself, contact somebody like Dez that's willing to work with you, that's willing to bring true strategies that are going to be impactful. Get everything done up front. Okay. Have your income together. Go ahead and be looking at your own credit. When you pull your 3 credit reports, that's not a hit to your credit report. Okay. So get all of this done in the beginning. Know what it is that you're looking for, and then decide one day. This is going to take major planning, but guys, it can be done. Decide one day that you're going to shop for that lender.
Okay.
So work with your realtor very closely and decide what one day you're going to shop with, for your lender. Because if you go and you have your credit report pulled multiple times in one day, it counts as one inquiry.
Okay.
One inquiry. So if you have everything laid out, hey, Dez, I'm ready. I've already worked with Karena. I'm ready to get started. Now I want to go to a lender, and you have 3 lenders that you want me to go to. I'm going to go to all 3 lenders today. I'm just going to be laser focused, and I'm going to go to these 3 lenders, and I want them to pull my credit today. That counts as one inquiry.
Makes sense.
Same thing with the car. You go the same day. However many car lots you want to go to, one inquiry.
Okay.
Another hack. Okay. So guys, it's doable out here.
Yeah.
It's doable. You just got to do it. You got to know what to do and how to do it.
Let's see let's see. One more question. Well, there's a few. Let's see. We don't want to keep you guys too long, but I do want to answer some of the questions that came in. The easiest way to improve your credit score. What is the easiest way to improve your credit score?
So the easiest way to improve your credit score is to pay your bills on time. You want to have 98% payment, at least 98% on time. That's going to give you the best score.
Okay. All right.
Okay. And then the other big thing is having it below 10%. Those 2 things, your inquiries are going to fall off. They say a couple of years, but they actually start the intensity of that inquiry is going to lessen after a couple of months.
Okay.
But your payment history and your utilization rate, those are the 2 big things.
Okay. I think you answered this question. What is the best way to pay off my credit cards to boost my credit? And it's pretty much keeping the balance at 10%, right? Or below.
Yeah.
So for instance, if you have a high credit limit of 1,000, you should never have more than $100 on that card.
Exactly. Absolutely. And that's what I teach folks, to go through their credit report, go through their debts. Just look at your credit cards, your revolving accounts, and take 10%. And if you're over that 10%, then you need to get it down ASAP.
Right.
And that, how you do that is going to determine your budget. It's going to determine your behaviors, things like that. Some folks have to cut up their credit cards. That's okay. Don't be ashamed. Do it if you have to. Do it if you must. Do not close your accounts, because that hurts you more than anything when you get it down to 10% or less. And I want to just throw this in there. Sometimes, guys, when you do get your credit cards down, especially to a 0 balance, you're going to get communication from your creditor saying you haven't used this card, and so we're going to close the account. That's okay. Let them close it. They're bullies.
Yeah.
And so they want to force you into debt.
Yeah, that's crazy.
Yeah. And you will get that. You will absolutely get that. Let them close it. Now, if you don't want them to close it and they've given you a little bit of time, go put something on the card for like $50, or use the card every month for like $50, just so that there's some type of activity.
Yeah, something that I do is because I literally won't really use my credit cards.
Mhm.
So I kind of force myself to use them by paying for gas or something
Mhm.
like something that I know I have to pay for. I'll like a bill, but then I'll
Yeah.
just, you know, pay it right off. I pay it
Right.
right back. Stuff like that. If you know you got to buy gas, you know you got to pay a bill, use your credit card and then turn around and just pay the credit card bill
Yeah.
before it's even due.
Right. And also, guys, when you're paying off your credit cards, another thing to consider is those credit cards with high interest rates. Those are the ones that you want to pay off first. Okay. Even if and you have to kind of do some math though, but even if the balance is not very high, okay, the credit cards that have the high interest rates, you want to get those down to nearly nothing,
Hmm.
because you're paying more interest than anything.
Okay, and the
Okay.
last question I have here is how long will it take to restore my credit?
So that's an individual um, basis. That's on an individual basis. It just really depends on what's on the credit. If you have, if you are, so let me explain this. There's restoring credit, and then there's rebuilding credit. Okay, so restoring credit is when you is the same as repair. It's when you have negative credit, negative debt that needs to be fixed. Okay, but then there's rebuilding where, well, I haven't really had any credit, and I've had some, but I haven't used it, and I don't have bad credit, I just don't use credit. That's rebuilding.
Hmm.
Okay, so your restoration process, it really depends on what's on your credit, because if you have to go through a full restoration process and then rebuild,
Yeah.
that's a little different.
Okay.
So we would have to really look at your credit report to determine what's needed. Some people I've come into contact with, they just need to rebuild, and that's it.
Okay. Ooh, well, this was an awesome chat, awesome topic, I think. Um, and I look forward to having these conversations,
Yeah.
building on it, because I learned some things today. So
Awesome.
yeah,
Awesome.
yeah. So that's great. So if anyone has any questions, if you want us to cover any topics that we haven't touched on yet,
Yep.
just send us a message, leave it in the comments, and we will definitely discuss them and talk about them. Okay.
Absolutely.
It's a team effort. It's not just me and Karina, but it's also
That's
you
right.
guys.
That's
So,
right.
just send us whatever you want us to cover. And any
That's right.
questions you have, we'll try to answer them to the best of our ability. So
That's
we'll be
right.
back next Sunday, Sensible Sundays
Yes.
at
Yes.
9:30.
I love it.
We didn't choose a topic for next Sunday yet, so
No, we did.
no. So
We'll
we
think
can't
of
let you
something
know.
and
We
let you
don't know what it's gonna be, but
know.
just
Right.
definitely tune in next Sunday at 9:30. And I hope you guys had a great brought in the new year. Lovely. I know I did.
Yes.
Karina, how was your
Wonderful. Yes.
yeah. So happy new year, happy 2020. Okay. Let's make sure that we bring our visions, our dreams, and everything,
Yes.
all that we aspire to be into fruition. And that
Absolutely.
we have to take action. All right.
Yes.
So we'll see you guys next Sunday at 9:30.
Bye, guys.
Bye.